Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Friday morning and the cues are largely on the negative side, but US markets were shut overnight on account of Thanksgiving, and it will have a truncated trading session today as well. But looking at the GIFT Nifty, it is looking like we are poised to kickstart the December series on a positive note. But let's see whether 24,000 level that was violated on the downside yesterday can be reclaimed in today's session or not. Of course, technical experts are of the view that the sell-off that we saw yesterday from the day's high, that was a sharp turn, wherein the Nifty was above that 24,300 mark, and we were all hoping that it will, go above that 24,350 level. That was the recent swing high, and that was looked upon as a key resistance, level. On the contrary, we saw a sharp sell-off come in, and we even violated and ended the day below that 24,000 mark. Of course, on the higher side, 24,100, that will be the key level to watch out for today. Let's see whether it was just an expiry-led sell-off yesterday, or has the trend reversed. We will be speaking to our experts and asking them their views on what they really think about this. But lots to watch out for, lots of stocks in focus. And your stock related queries, of course, will also be in focus. So if you have queries, send them in to us. We'll try and take them up during the course of the show, and we'll get them addressed. But before we move any further, let's take a look at the top headlines at this hour. Asian markets opened largely lower in absence of cues from the US market, which was shut for Thanksgiving. Investors track inflation data from Japan that rises more than expected. The GIFT Nifty is suggesting a mildly positive start for our market. Crude prices remain range-bound even as US crude inventories rise on lower demand. Meanwhile, gold prices tick lower as the US dollar strengthens. India's second quarter GDP is seen at a six-quarter low of 6.5%, dragged by the manufacturing sector, low government capex and poor consumption. Q2 FY25 GDP is, of course, seen at a six-quarter low, as I mentioned. 45 new scripts get added to the F&O segment. F&O contracts on stocks including Jio Financial, Zomato, Avenue Supermarts, BSC will all be available for trade from today. And Zee Entertainment shareholders reject proposal to reappoint Punit Goenka as the director at the AGM. This comes after he relinquished his MD position earlier this month. Goenka will, however, continue to be the CEO of the company. Well, then let's take a look at the cues for trade then. Of course, we did, see the Nifty take a sharp turn. In fact, the entire market take a sharp turn yesterday. But the good part was that the broader end of the markets managed to hold out. The mid and small cap indices eked out very small gains, although ended flat, but still they fared better than the frontline indices, and we saw the breadth in favor of gainers. So today's move will really determine which way we are headed from here, because yesterday experts are of the view that a lot of that sell-off that we saw could be expiry related. Of course, we had the FISL figure as well, exceeded 11,000 crore rupees, so that's a huge figure. But whether or not the selling was also expiry related, or is there a reversal in the trend, of course, a 3-day or 2-day kind of, buying coming in from FIIs in recent times. Of course, the Monday's buying was largely led by the MSCI rebalancing. But, of course, FII buy figures for today will perhaps give us some clue as to what's really happening. In terms of the Nifty Bank Index, that was also down almost 400 points, ended below that 52,000 mark. Infosys, HDFC Bank, Reliance, these were some of the stocks that contributed most to Nifty's fall yesterday. All of the sectors, in fact, including PSU banks and media, ended the day in the red. IT and auto, of course, were the worst hit. IT pack losing in excess of 2%. Adani stocks, however, saw a mixed close. Adani Ports was down 3%, but Adani Enterprises, saw good gains on the Nifty on a day when the markets were weak. Adani Total was the top Nifty 500 gainer yesterday, but HDFC Bank was also in focus. The market cap crossed at 14 lakh crore mark for the first time ever. But on that note, just want to take you through, the fact that F&O ban list doesn't have any stocks today. So no stocks in F&O ban for the third straight day. Of course, as I mentioned that the FII sell figure was huge, in excess of 11,000 crore rupees. DII's net buy figure came in at 8,000 crore rupees in the cash markets. But on that note, let me get on board our technical expert for today. Joining me is Raja Venkatraman, who's the co-founder of NeoTrader. Raja, great to have you on the show. Would you be scared by the intensity of the fall yesterday, or would you say that it was largely expiry driven and December series, we could resume the uptrend that we saw, that in fact started last week?
Yeah, good morning, Nandita. Thank you for inviting me to the show. We have been looking at the markets that has been trying to do its best to stir up some bullish momentum from the lower levels, having declined for more than 1.5 weeks, months rather. The entire positioning had got into an oversold area. So the bounce was awaited, and it did occur. Now, instead of misinterpreting this bounce as a bullish scenario, one should now step into a zone where the market could display such kind of action. Now, what has really happened yesterday is that at higher levels, the surprise rise which we witnessed due to oversold conditions, and also due to the lack of selling participation, all those things combined have produced this revival. But then the fall which happened yesterday definitely has come into a very important support zone, and it filled the gap which got created on Monday. So now we are at an interesting stage at the close of the week. The important supports have been reached around 23,900. Now, a closing below this would once again endanger the 23,200 levels. So, unless a closing is emerging below 23,900, I would think that this is actually an opportunity to go long. Yes, there is some more room to the upside. I would say in the region of around 24,500 is my first target. 24,800 is the next target, which I am expecting in the Nifty. If you ask me whether Nifty is in a buy on dip, sell on rally mode, the answer is yes. Now, that's got to be the play of action in the next 1 month, because it's not going to be an easy month. There are a lot of stocks getting added into the FNO. There are a lot of margin restrictions also coming in. So the derivative space is undergoing a major reformation. And this kind of news flows that could trigger some kind of reactions, that's also going to be there. So this series, the December series, is going to be a very challenging one. It's going to be a volatile one. So one should be a little optimistic and also cautious, because optimistic in the sense that the markets are going to show some bullish upside unless and until the lows are not reached, because the lows were important levels which we have discussed earlier. Now, if those levels are not broken, the bullishness will be there. But then it's not going to be a one-way ride. Now, to help us move higher, we will need the help of Bank Nifty. And I feel that Bank Nifty has managed to hold our nerves together. Because when Nifty fell, everyone got shattered, and many people actually exited their positions as well. And then suddenly they found that Nifty is giving a turnaround. But then if you see, Bank Nifty has done much better. It has managed to move. It has taken support around 50,000, which was a crucial support region. It took support there. Now it has managed to come near another important resistance zone, which is around 53,000. So the option data suggests that Bank Nifty is trying its best. And if Bank Nifty moves above 53,000, we would see some more bullish traction here. So in the order of precedence, I would put Nifty IT first. All of us know Nifty IT has been one of the best performing index. It has given a very strong breakout. So Nifty IT will be number one, Bank Nifty will be number two, and Nifty will be number three. This kind of reactions are going to come in. So one should not get over leveraged, because with the additions of new members, there is bound to be some dilution from the bigger ones which were in action for the last so many months. So it's going to be an interesting month, challenging month, but then definitely it's a month for traders.
Okay, month for traders. But another question I want to ask you is about the fact that BSE has shifted its weekly expiry contracts from Friday to Tuesday. How are you viewing this move? Would this reduce volatility, leave more money in the hands of traders? How are you really viewing this move?
See, changing the dates would not, produce any kind of change in the perception, because the people who are trading would always find a way to trade, be it on either of the expiry dates. Yes, Friday was where it started, but then I would say that it's not going to change the perspective. People are going to continue to participate. Initially, there may be some time taken to adjust to these expiry, but then at the end of the day, like I said, there are a lot of avenues now available for traders. So I don't think there is going to be any change in the momentum. It may take a few days for us to get adjusted to the new positioning of the dates, but then the volume will definitely pick up because participation will be much higher.
Okay, participation will be higher. A few stocks, in fact, 45 new entrants in the F&O segment from today. The likes of DMart, Zomato, Paytm, Jio Financial, Nykaa, all these stocks. And any of these stocks that you would bet on right now, especially from the new age basket?
Yeah, from the new age basket, I would like to bet on Zomato is number one. And I would also like to bet on KEI Industries. KEI Industries has been one of my favorite stocks from the cash segment. And now I find it making an entry into the F&O space. So these two stocks are something which I would be tracking. And I would definitely be eager to see how they are performing on the derivative side.
And DMart's entrance in the F&O segment, how is that viewed for the stock? Because the stock has clearly been underperforming. Could that or could this reverse fortunes chartically? How is it poised?
See, entry into the derivative space will only bring in some attention, but then eventually at the end of the day, the company has to perform for us to really see some traction here. So yes, compared to DMart or Zomato or KEI, the setup in DMart definitely looks stressed, and it would take a while for it to show some traction. So I would not be in a hurry to participate in DMart, though it is right now at an important support zone around 3700. I would still see how its entry into the derivative space is being accepted.
Okay, that's the view. What about BSE? The stock, off late has come under some bit of a selling pressure. Any particular level that you'll be watching out for in terms of support on this counter? 4,613 is where it's at right now.
Yeah. So when you talk about the exchanges, some of the stocks like BSE, MCX, they have performed really well and they continue to generate demand at lower levels. Now, when you talk about BSE has come into some supports. I don't see any kind of indication that could tell me that there is going to be a sell-off here. So any dip in BSE should be a buy. Overall setup is very good. So if you were to looking at lower levels, it did occur in this week towards 4,300, and from there once again the prices have bumped up. So overall, everything is good about BSE. So one should continue to participate.
Okay, one should continue to participate in BSE. The signals are on the bullish side. But what would you do with a Z? There is news flow around this company, of course, that the company has, or shareholders have rather rejected the proposal to reappoint Punit Goenka as the managing director. However, he will be continuing as the CEO. The stock has seen good traction, last month, 1 month. In fact, even the last few sessions, the stock has done well, held out in the green. Today, would you take a trade? In the pre-open, at least, we can see that the stock could see good traction today.
Yeah, see, Z has been a very sluggish stock, and there are hardly any movements to the upside. There are large movements to the downside. So, Z primarily, whenever we have discussed, I have offered it as an opportunity to initiate some shorts. So, at the current juncture, it has come into some important support levels. So, shorting now would not be appropriate. But then there are most of the times there are more negative news flows, and now today you may see a rise, but then eventually at higher levels, once again it gets into a short position. So today's gap up opening indicates that it has come into a
Right.
strong resistance zone. So now this particular stock has come into a resistance zone around 133. So this is already reached its potential for the day. So
Right.
I don't think that if it is unable to move above 133 within the next half an hour, then it could offer us a good shorting approach with a potential target towards 122.
All right, that's the view on Z. But then, of course, markets have opened up, and we are seeing some bit of green on the screen at the current juncture. We did, make a dash at that 24,000 level. Couldn't really cross it decisively, but 23,975 is where we are at. So December series for now has started on a positive note. Sensex as well. 79,200 is what you can see on your screens. The mid cap index, although was a little wobbly at the start, it has managed to edge back into the green right now. Bank Nifty is showing good strength, 52,000 back on the charts for this one. Let's take a look at what the other sectors are doing. Of course, IT was the big laggard yesterday, and so was the auto pack this morning. Most of the sectors are trading in the green, but IT is extending some of those losses, down 0.2% at the current juncture. Autos have staged a good comeback, 0.3% higher, for the auto index. Energy pack showing some traction. Pharma is doing well today, 1% up on this index. So all in all, the bias is on the positive side at the current juncture, with just about IT and realty pack in the red. In terms of individual movers, just want to see which are the top movers on the index. HDFC Life, SBI Life, these two stocks, these were the top laggards yesterday. On the back of CNBC TV 18 exclusive that IRDAI may look at putting a cap on bank insurance, but there has been clarification coming in from these life insurers saying that there is no information to that effect from IRDAI, and IRDAI actually looks to have a discussion with the industry before coming out with such regulations. So on the back of that, we've seen strong traction coming in on HDFC Life and SBI Life. Pharma names, as I mentioned, doing well. Dr. Reddy's Sun Pharma among gainers. Adani Enterprises extending its gains. Some FMCG names among gainers. HUL, even M&M for that matter, is doing well. Yesterday it was among the top laggards. And other consumption names like Tata Consumer, Titan are among the gainers. And Reliance Industries has also made a good comeback. It's up by about 0.5% or thereabouts. On the flip side, some of these names like TCS and Tech Mahindra are extending their losses. Maruti Suzuki, Hero Motor from the auto pack under pressure. You have Power Grid, that's the top laggard, and Ultratech Cement is also among the laggards. Raja, before I move on to other stocks, want to know what would you be recommending for our viewers this morning looking at this kind of open?
Yeah, so today I would like to recommend one stock from the IT pack, because IT has definitely been moving well. Well, you may see some profit booking, but then overall IT is in a much better show of strength. Like I mentioned, the pedigree of the ranking. So first, I would like to go with Wipro. Wipro has given a good move, and it continues to hold on to higher levels. So buy at current levels with a stop at 569 and for a target of 588. And the second stock which I would like to suggest is from the pharma space, and that is Biocon. Over the last 2 to 3 sessions, Biocon has been generating some good buying interest, and pharma stocks, select pharma stocks like Biocon, Laurus Labs, these stocks are picking up, and I find that Biocon could be a good selection here at the current levels with a stop at 360 for a target towards 380.
Okay, those were the recommendations coming in from Raja. But Raja, one counter that's been catching attention is HDFC Bank. It has managed to cross that 1800 level, hit a fresh high in recent times, and in recent times it has emerged as emerged as one of the top contributors to Nifty's gains as well. Now that 1800 level has been crossed, although we are just shy of that level at the current juncture. What is the kind of up move you see here, and is it a good time to take some positions here? Is it a positional play right now, because it has outperformed the likes of ICICI Bank over the last 1 month as well?
Yeah, you're right on that. HDFC Bank has made some nice rounding pattern over the last 4 to 5 months, but then the move above 1700 has caught everyone's attention. Now, yes, it is trying to edge higher, but considering the market scenario, it is still taking some time. And but yes, the good part is that it's holding the higher levels, and that's what is also helping Bank Nifty. Now, at this stage, I would do a two parcel approach here, because overall, if I take a look at the way HDFC Bank is moving, it's moving quite sluggish. So I would like to invest some in, if I'm taking as a long-term play, say maybe within the next 1 year, for a target towards 3000. I would look to buy some at current levels, look for dips in the region of around say 1700. with a stop below 1600 for a target towards 3000.
Okay, that's about HDFC Bank. I want to ask you about a Honasa. This stock had been under severe pressure, but in the last 2-3 sessions, it has seen a good traction. It has made a good comeback yesterday as well. It gained somewhere around 5 to 6% today as well. It's the top Nifty 500 gainer, 9% up move on this one. What are the patterns looking like on the charts right now for Honasa?
See, Honasa has been, a very fluid stock. Sometimes you get a move, and the kind of extent of decline which it witnessed, there is bound to be some value buying which is being seen here. But then we got to understand that after getting into deep oversold levels, this is the kind of move which you will witness. So, one, if you have invested into this stock, have a target of around 295 as the first one. And if you are able to close about 300, then the next target is 352. So these are two targets which I envisage for Honasa. Yes, there have been extremely it has been it has got a very sharp decline, and that is what is now producing this bounce.
Okay, that's the view. But before I move on to queries, I want to take up your views on NCC. It has, bagged an order worth 3,400 crore rupees. It's a huge project, and the stock is reacting. 4% up. Would you take a trade on this particular stock? Still, some 40 odd rupees away from 52-week highs.
Yeah, NCC once again is a slow mover, and it is taking its while right now. But then the overall setup is not very encouraging, as the movement has been quite lethargic. So at the current juncture, if I take a look at NCC, I got other better bets to put my money on. So I would skip it for now.
Okay, so you will skip NCC for now. But what about jewelry stocks? Today, PC Jewelers is shining bright. Of course, it has set 10th December as a record date for a 1:10 stock split. Within the jewelry space, would you stick to something like Titan, or would you look at these players, Senco Gold, PC Jewelers, these kind of players right now?
Yeah, so amongst the jewelry stocks, PC Jewelers definitely is showing a much better movement. But then amongst the name you mentioned, Kalyan Jewelers is a much better bet, because Kalyan Jewelers has been holding on to higher levels. And if I were to select a jewelry stock, it would be Kalyan Jewelers, because it has been sustaining the higher levels. There is a consolidation. So any move above 725, 730 would be a good consideration on the long side.
Okay. All right. That's the view on the jewelry space. Kalyan Jewelers looking good on charts. But let's shift focus to the viewer queries that are trickling in this morning. The first one that I can spot on our feed is from Naveen, and it has come in on Amber Enterprises. The stock was under pressure yesterday. There was a Goldman Sachs downgrade. It was down some 7% or so. At the current juncture, I haven't really opened the charts yet, but how are the charts of an Amber Enterprises poised right now? It is extending losses today as well, and in the last 5 sessions itself, I think it has seen a good 10% down move. Would you take or would you advise a buy on dip, or would you say steer clear, because it hasn't been doing all that well in the last 1 month, although last 6 month gains have of course been 60 to 70% or so.
Right. So it has moved significantly higher in the last 4 to 5 months. And now what you're actually seeing is backed by the news flow, some profit booking here. So this would not be a good time to enter into this stock, as you can expect some more decline here. So the ideal levels to consider going long into Amber Enterprise would be in the region of around 5,700. So till then, I would wait and watch.
Okay, that's the view. Wait and watch. Naveen, hope that answers your query. The next query is coming in from Satya CK. He wants to know your thoughts on which of these pharma stocks are looking better right now. Aurobindo Pharma and Alembic Limited. Alembic Limited, which is quoting at 132 rupees at the current juncture. For the next 6 to 9 months, which one would be a better pick? That's his question.
Yeah. Alembic Pharma is much better. Both of them have definitely, been under some stress. But then Alembic Pharma has been able to contain the stress levels much better. And I would say that if there is a revival amongst them, Alembic Pharma would definitely take the lead. And one can expect a move at least till 1170 at the moment. If 1170 is exceeded, then you can have a target of 1300. So 1170 is a crucial level for Alembic Pharma.
Okay, but I think he mentioned Alembic Limited, if you're tracking this one, because this one is quoting at 132 rupees, if you track this stock.
No, Alembic Limit. I heard Alembic Pharma. Sorry, Alembic Limited. Let me just
all right.
give you a view on that as well. Alembic Limited right now is in a consolidation zone, so it would not be a good time to. You can ignore Alembic Limited.
All right. Okay. So Aurobindo much better compared to this Alembic Limited that he's asking.
Pardon?
So Aurobindo looks much better in comparison with
Yeah,
Alembic Limited
Aurobindo
right
looks
now?
much better compared to Alembic Limited because you said Pharma.
Sure.
I saw Alembic Pharma.
No, no, no. All right. So the next query, let's focusing on KPIT. That's one query that's coming in from a viewer. Wants to know if it's looking good or not at the current juncture. 3-year time horizon.
Sorry, I lost your voice. KPIT. Okay, KPIT.
Query on KPIT.
Yeah, KPIT is also a new
Yeah.
inclusion into the derivative space. And yes, the signs are emerging of a revival. But then at the moment, compared to all the tech stocks, it only shows some feeble signs here. So I would not wade into KPIT at the moment. It's an avoid from my side.
Okay, KPIT is an avoid. Next couple of queries then, we don't have much time. But I think I'll take a query on Indigo Paints. This one is coming in from Punit Rajiv. Wants to know your thoughts on the stock for the next 3 years. He is holding at 1430. Indigo Paints, what would you advise him to do?
Indigo Paints is also a very slow mover. So I would not advise you to put your full money into it. And in the last few weeks, the stock has actually undergone some major correction and it shows signs of further decline. So it would be best avoided.
Okay, Indigo Paints is also an avoid. Any view on Vodafone Idea? This one's coming in from Maninder Singh. He wants to know your thoughts on this stock. Of course, we saw a good up move. We saw a good up move on Vodafone Idea over the last few sessions. So, would you take a trade or would you say far too volatile?
Yeah, see, the telecom spectrum news does incite lot of interest, but then the way the markets have been behaving, it is not very clear. Even the market itself is not clear. So at this juncture, taking a trade in Vodafone Idea, it's not a best buy yet. So for getting into the best buy zone, I would wait for it to move above 9 before I take a trade.
All right, that's the view on Vodafone. But with that, of course, we've come to the end of the query segment. Raja, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Look forward to connecting again sometime soon.
Yeah, thank you. Bye.
Thank you. Well, on that note, let's take a look at the markets. We have reclaimed that 24,000 mark. In fact, it's a good triple-digit up move on the Nifty as we speak. Mid-cap index, although underperforming the benchmarks, but it is trading in the green as well. And the bank Nifty as well, 52,100 is where it's at the current juncture. So things looking good. December series. Let's see if we end the day in the positive zone above that 24,100 mark, and in the subsequent days, if we can get past that 24,350 mark, which is a recent swing high, we could see the possibility of a Santa rally as well. But on that note, let me see if we have our next guest joining in as well at this juncture. Joining me is Deepak Ramaraju, who's the senior fund manager at Shriram AMC. Deepak, lovely to have you on the show. What are you making of the kind of recovery that we saw in recent times? Then again, yesterday, we were in a spot of bother. Would you call it just an expiry-related phenomena, the kind of sell-off that we saw yesterday? And if the recovery that we are witnessing right now, if it sustains into today, would you say that it will last throughout December?
First of all, thank you for having me on the show. Very good morning. And definitely, yes, it looks like a technical kind of correction that was happening yesterday because of profit booking around the expiry phase. And if you had actually looked at the FIs were kind of having the positions on the futures actually. So that's what the kind of unwinding was happening in the positions there. So that's the reason we saw kind of dip in general yesterday. But looks like the markets are kind of bottoming out right now and kind of we are entering for a recovery phase from here onwards. So because supported by the government spending is going to pick up now because after the state elections are over. So that's where the certainty of the state elections or the sentiments around that is also being positive. So we can expect the markets to move up in a slower pace. We may not be seeing a significant up move in the immediate future, but a gradual recovery is expected in the markets.
Okay, but do you see any chance of a Santa rally, or do you think that's too early to call, anything
It's
like
too
that?
early to predict that, yeah.
Sure. Looking at the foreign flows. Of course, FIIs have been persistent sellers, but in the middle, 3 days of buying coming in. Of course, one day it was MSCI related, but yesterday the sell figure was quite huge. In excess of 11,500 crores. Of course, after the China threat, now the bigger threat is money moving back into the US, given the fact that we've seen dollar strengthen after Trump's win in the US presidential elections. Here on FII flows, do you think post January we could still see some bit of a recovery in flows, or would you say that the trend will remain foreign funds selling and going back into the US?
See, it's too early to take a stance whether the FIs are going to come back immediately into the markets right now. But obviously, yes, the yesterday was more like a technical because of the futures expiry. So we can say that the flows which went out yesterday was more to do with the index positioning and then people were unwinding the positioning. It was a monthly expiry. So, but having said that, the new flows to come in, we need to get a clarity of what is going to be the Trump policy measures. So that will be something the clarity has to emerge there. And one second thing is if you look at the inflation in US, it's kind of similar levels in line with expectation. So kind of you can expect the rate cut probability to get around 68% in this month in December. But very unlikely from personally, I don't expect any rate cut coming in because we have already seen two rate cuts back to back. So that's also kind of keeps the uncertainty in the markets to a certain extent. That's the reason I don't expect the FI flows to immediately come back in a big way, but it can trickle down slowly. It also depends on how the government of India kind of spends money right now because we had only had one third of the fiscal budget, whatever expectations that we had. Only one third has already been spent now. So the remaining two thirds has to be spent over the next 4 months. So that's where that will actually drive the decision making on whether to invest in India or not for the FIIs. So we can expect some flows to come in because the government is going to spend money now in the post the state elections overhang is over now. The spending will come through. So that will actually kind of trigger some of the cyclical sectors or the infrastructure space kind of a names. So that can actually kind of attract more money to coming back to India. So it's early days. We'll have to wait and watch.
Sure. We have seen an almost 10% kind of correction from all-time highs. Last week when I was speaking to fund managers ahead of the Maharashtra poll results, most of them were of the view that it's a good time to sit on cash at the current juncture. Post Maharashtra poll verdict, has anything changed? How much cash are you guys sitting on? Is it time to deploy, or is it time to wait a little more and get into stocks perhaps in the new year?
See, in my view, from Indian markets perspective, it's time to start deploying money in tranches, not in a kind of in a hurry to put all the money in the one go right now. But yes, the markets are slowly moving up. There'll be gradual recovery happening. We are also seeing the ceasefire kind of coming off in the Israel and Hamas. So that's kind of a positive move there, and the overall sentiments are relatively trending positive. So it's kind of better to invest money in tranches right now into the markets.
Right. Two-part question. If you said it is time to start deploying, where do you deploy? Because after Q2 earnings, of course, we've seen pain emerging in some sectors, while some sectors have done okay. So, which sector should one deploy money in right now? And in terms of sector-based investing, how has it evolved over time, and why is there a growing need for more dynamic sector allocation strategies?
So right now, if you look at the consumption theme was what kind of outperforming the healthcare, and as well as the consumption theme was relatively outperforming the broader cyclical space. So now the table can turn a bit. So sectors like your IT, or for that matter, other cyclical counters like a little bit of capital goods or the defense names, or probably the railway kind of names can also move up because of the government spending coming in, the order books picking up there. Some of these stocks can actually move up in the medium term. So we'll have to wait and watch how the government spending or the order flows will come through. So that will actually keep a trigger on the markets basically.
All right. And I want to also get in your thoughts on the MFI space. There's been, evidence of stress in this sector for 3 months in a row. In fact, disbursements in the MFI space have been very weak. And sources are saying, money control sources say that disbursements in November was in fact lower than September and October levels. So how are you viewing this MFI space, and for banks as well? MFIs and credit card segments have been a pain point. Any thoughts on how to navigate this particular space?
See, first of all, the urban consumption and rural consumption both are taken a back seat because the lower government spending had impacted that, because the lowest rate of the income got impacted quite a bit when the government spending had taken a slower path. So that's when the entire segment has hit a slower trend right now. That's the reason we saw kind of stress building up in the MFI space specifically. So now talking about the banks are facing other issue of mopping up the deposits. Slowly that's improving, but yes, we need to see how the RBI policies are going to tweak around, because going ahead, the banks has to borrow more from the markets incrementally, so they'll have to depend on the market borrowing growing ahead. So that's something we need to wait and watch. So I'm not a buyer right now in the MFI space until there's a recovery seen in a meaningful way. So we'll have to wait and watch on the MFI space how things pan out there. And also the banks also, we are seeing a valuation catch up that's happening because it's quite beaten down. But slowly the recovery is expected to happen, and the credit growth is also picking up slowly. So as the government spending comes in, the demand will also pick up and the credit spending will also come through. So that's where some movement can expected in the financial services space as a whole.
All right, that's the view. Last question really on the insurance space. Of course, there have been concerns about mis-selling of insurance and products by banks, and of course FM and IRDAI have voiced these concerns as well. Of course, there are no regulations in terms of bank assurance as of now. No new regulations as was being feared by the street, because companies have said that there have been no intimation from IRDAI to that effect. And recently there was the issue of surrender value, but insurance companies were turning optimistic on that. Too many moving parts when it comes to insurance. How are you viewing this sector?
See, one, definitely the insurance companies are leveraging the bank space quite a bit, because the bank insurance channel was the one most reliant for them, because it was easy to pass through the kind of the selling was easy for them. So, but now, yes, obviously the regulators would be having a close watch on how the insurance companies are making selling the policies there. And obviously that's where if the regulators have come heavily on that, so that means to say that's kind of exploited also quite a bit. So one needs to be watchful about these kind of issues. So it's quite a bit of over kind of leveraging the kind of the systems that we have in the place. So that's what led to the kind of this one. But I think definitely it cannot be that banks will not be completely allowed not to sell. So over a bigger period of time, I think things will settle down. I think this issue has to settle down over a period of time, and obviously there'll be systems and processes in place, and to make sure the checks are there in the right way, the insurance policies are sold to the investors end of the day.
Okay, got your point. One last question really, within the mid-cap universe, are you seeing any kind of or any spaces where valuation comfort is emerging after the recent sell-off within the mid-cap universe? Because if you take a bottoms-up approach, which sector should one look at?
So bottoms up, I think the cyclical space, some of them were quite beaten down a bit. Some of the names like your defense or the railways, they are quite beaten down. They've taken almost 40% notch from the top, from the peak. So slowly, when the government spending comes in, some of these can see some kind of buying back happening in some of these sectors. But yeah, everything depends on how the government spends and the order books flows through there. So that's where that looks attractive. The IT as a sector, as a contra bet, is also looking better because we are seeing a cyclical recovery happening in the US. So that's kind of going to be US and Europe for that matter, because the rate cut is actually going to be a major trigger for the IT space. So that's going to kind of flow through. Kind of the more deal wins can be expected in the IT counters going ahead. So IT is the contra bet that we have that's running up. So.
All right, Deepak, with that, I would like to thank you for taking out time and joining in this morning and sharing your thoughts. Always a pleasure. And I look forward to interacting with you again sometime soon.
Thanks.
Thank you. Well, on that note, cooled off slightly from the day's high. We are just around that 24,000 mark as of now, but holding on in the positive zone, and mid cap index also just about in the positive zone at the current juncture. Let's see whether it will be a positive close for the day or not, and in the coming days, if 24,350 is conquered, perhaps then we can say that there is a chance of a Santa rally. But for now then, it's a goodbye from me. We are timed out on this edition of Opening Bell. Thanks a lot for tuning in. Of course, we are waiting for a new listing, Environ Infra, so to say, listing at 10 a.m. Watch out for that. And there is a new IPO that has opened up for subscription, Suraksha Diagnostic. We'll be touching base with the management at 11 a.m. Don't forget to tune in for that as well. Have a great trading day and come back and join us for our other shows. Thanks a lot for watching.